You wanted imbalances on Friday on the quad witch expiration? Ho, ho, ho. Did you get some big ones both on the buy side and the sell side? We'll see how our liquidity provider handled those. We're going to talk seasonality, folks, and some work, some don't, but I'm going to talk about kind of an unfamiliar one. Let's get fired up. Gordon Johnson, 835. He's bullish stuff. He's bearish stuff. He's got new initiations. TikTok deal. A lot of implications for that. Pfizer getting involved more in obesity drugs. It's a Monday, pre-market prep. Let's wake up. Let's get going.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, traders and investors. Started the day a little bit in the red, but look what we did on the close on Friday. Still above 6,700, down 20 and a half handles, 6,702. Buck slightly in the red at 97.11, just trying to clear that 50-day. TLT flat, 89.01. Thought rates were going down. This is down a couple stakes. USO up 63 cents, 74.15. No clear technical pattern there sticking out to me. GLD can't keep a good thing down. Up 362, 342.80. SLV with a 39 handle on it, up 57 cents, 39.61. And Bitcoin got half of that move back now, just kind of waffling down $2,300, just under 113K. Triple D, let's bring them in here a little bit under the weather. But
I think I got hit with COVID again for like the 27th time.
Oh,
so
man.
just a little bit Friday, we were talking in the STN room. I was like, I just have a little bit of a tickle in my throat. Saturday sick. Yesterday really sick. Yesterday was a mess. Couldn't get out of bed. I feel a little bit better today, but it's one of those, like, just the headache. You know, the headache is just pounding and pounding. And then my daughter had, and she bounced right away. And the kids never get that sick from COVID. That's why I'm pretty sure it's probably another taste of COVID here. You just can't get rid of this thing. It just keeps coming back every September because the kids come back from school and they bring all their diseases with them. So
there's, no comment on that.
No comment. Bring the Brentster in here.
Yeah, I'll bring the Brentster in. Brentster, I want to come in with you. Seasonality. Every year I write an article. Sell Rosh Hashanah, buy Yom Kippur. And traveling this weekend, I don't write the article. I mean, Santa Claus rally, well, sell in May, it go away. Definitely didn't work, right?
Breaking news. Brentster, you breaking this. Let's talk.
Sure. We got Oracle. We got some Oracle management changes. Safra Katz is going to be moved to the vice chair role. We have two new CEOs, co-CEOs. Clay McGorrick and Mike Cilia are going to be named the company's co-CEOs. Also, the company is reaffirming some guidance here toward the bottom of that press release. Oracle is moving lower on this, down about $8 or so here on this news. Maybe a little uncertainty with Safra Katz. I'm not totally sure.
I think
I
so.
understand
Just
the move lower, but
management changes maybe. Yeah. We're also on a bad day to report anything here because you can start to see, like, and we'll get into this, the retail, stocks are kind of starting to roll over. Not that Oracle's retail stock, but it's kind of become it. Stock was trading up substantially last night because of the TikTok deal. They were buying this up at 313, 314 last night, paying up a little bit too much here. You can see now stock just sold off just since 8 o'clock when this press release just came out. I mean, 300's big. I did buy some in the longer term account. I have no trade on this right now, though.
And did someone leave? Could you give me those management changes again?
Yeah, I think Safra Katz, who was the CEO, is going to be moved to the vice chair role. And then the former president of the company, one of the company's business segments, is going to be elevated to the co-CEO role. And then there's going to be two CEOs at Oracle now. Clay McGorrick, president of Oracle Cloud and Infrastructure previously, and then Mike Cilia, formerly president of Oracle Industries. All these are happening within the company. These are execs that are coming up from further down the ladder at Oracle.
Maybe
I mean,
confusion, co-CEOs. I don't know. Like, it's kind of weird.
It's a little
So,
weird.
it's a little weird.
But I mean, if the prospects that we've learned about from Oracle over the last few weeks are going to be true, and this is one of these segments, which is a small slice of their sales right now, is going to be over 100 billion. I mean, maybe this is like a prudent move to have a couple CEOs.
I mean, lots to think about here, and maybe it proves to be prudent, maybe it doesn't. I think they're selling person asking questions later. I do think the day matters here. You definitely have a lot of tech stocks under pressure here today, which we can go through. And obviously, we were talking about this before the Oracle news, and we were going to start with this was, the moves from Friday. It was pretty much, crazy buys in some of these tech stocks here. Like, bring up Microsoft here. Microsoft ran up $6 in the last 60 seconds, really, on the day. And this was a huge buy imbalance. I did short the close on Microsoft, which worked out very well. Live in the STN room, obviously, we do fades on these trades because their order imbalances usually end up being more turning points. And that's a bigger picture here, too. Is sometimes we need to see everybody just give me in at any cost. Sometimes those can end up being turning points. And, not trying to call top here in the market, but we've got to obviously be aware that options expiration days are sometimes short-term turning points here. So I wouldn't be surprised if we see a little bit of weakness the next day or two. I still think we're going to be higher at the end of the year. I'm not sitting here calling a top. But I mean, when everybody's just relentlessly getting in, maybe it's time for a little bit of a shakeout. I saw the video of the kid in the pool, and he's got all these Tesla shares over the weekend on YouTube and say, it's going to 1,000. This, I saw a meeting with Musk, and I'm rich and all this. And I'm like, we've just made millionaires out of a lot of people that, are just basically, just got lucky timing wise. So, I mean, when we saw videos like this back in 2021, it ended up being, a selling point here too. So there are some signs, but, at this point in time, the party continues here. And, stocks, dips do get bought. And I don't think it's going to be, I don't think it's going to be just like a boom, everything's selling off and we're losing 5-10% a day here. But, you got to be aware that we are overbought on a lot of stocks. I think we're due for a little healthy pullback.
What I was referring to was sell Rosh Hashanah, buy Yom Kippur. Tonight is the first night of Rosh Hashanah. So the theory is that people look to exit the market on the holiday because you spend the next 10 days, reflecting on the year. You want to be, free of investments and you just want to think about being a good person or a bad person. So theoretically, I've tracked it over the years. It's certainly nothing foolproof, but a lot of times you do see declines in between the 10 days of the holidays commencing tonight and Rosh Hashanah, which is tonight, tomorrow, and then goes through the next 10 days. Next 10 days theoretically would be a week from Friday when you would come back into the market. I mean, the only thing I care about is, does it coincide with the day off in the markets? Do I get it this year? I get 2 days off. Back when I was younger, I cared about if it interfered with the Michigan football game. So other priorities there. But right now, sell Rosh Hashanah, buy Yom Kippur. Also, the fact that, just to create, it was a quad witch expiration, very unusual. I think those closing prices for Friday, I mean, right now, we have pulled back a little bit, but I think I always talk about the Fridays highs and closes as being important. Well, they're much more important this week. And just one final thing, like on Oracle, I know it's the news and I know it's moving and everything. As long as it stays above this gap area, to me, bulls are totally in control. I think the only thing that's really going to move the stock moving forward is they get guidance out to 2030. And they gave some pretty hefty guidance. So as long as they stick with that guidance, as long as all those clients are coming in, but you get one hiccup, oh, well, this one contract canceled, or we're not able to do this, then you'll see a precipitous decline in the stock. But the momentum is with it. It's holding the gap. To me, this news, a little bit of shuffling here and the other thing. Yeah, you get your short-term price movements, but I think longer term for Oracle, I'd like to see how it follows those hefty projections that it made a couple weeks ago.
Go back to App 11, and I just want to continue to cover the imbalances from the close to show you the crazy moves. App 11, Robinhood officially added to the S&P here this morning, but the indexers were buying them on the Friday close. If you look at App 11, ran up $20 in the last 15 minutes. So as indexers obviously have to buy the highs. Again, a lot of times those prices that you get there, like it wouldn't surprise me if Apple haven't put in a short-term top there. You know, and obviously we're only off $2 from those highs, but you know, 630 to 650, you know, 20 points higher there. Robinhood, same thing. When they go into the actual index, sometimes they can show weakness here. You can see Robinhood rolling over here too. Same thing, running up about $2 in the last like 20 minutes because the indexers got to buy. So you got people front running that action. So sometimes the indexers to buy is like the last people to buy. So I do think I'd keep an eye on Robinhood. I think the highs from Friday and Apple and Robinhood are important points. If they can get above there and start making new highs, then that bet's off. But I think at this point, you probably got some index arbitragers saying pretty ridiculous moves there. And just maybe, you know, those indexers are buying the top.
Yeah, and I mean, you got the clear. I mean, Bank America had a big selling balance, right? That sold off on its imbalance, and it's still continuing lower. I know there was some after hours price action in JP Morgan in the XLF. So a lot of considerations here. Starting out in the red. What do you got for us, Brenster?
Just hanging out. Nothing.
Okay.
Here I am.
I like, you know, I thought we were going to come some breaking news. Okay, so
We covered the Oracle breaking news. He just hanging out. He likes hanging out.
He missed me on Friday.
I know. We all missed you Friday. We missed Joel.
I'll tell you, Spencer's kid is so cute, man, and so well behaved.
Spencer Israel.
Yeah.
It was great. Spencer Israel came on the STN show for 20 minutes, brought his kid on. We were just having a lot of fun there, reminiscing, obviously. And, you know, they're doing a lot of good stuff over there with JC. So, you know, again, we're going to have a couple people. I'm going to have one of his crypto analysts on in 8 days here for crypto. I don't know if we've got a Crypto Tuesday, Crypto Thursday. I don't know if we figured that out yet.
We're crypto. We're crypto.
Thursday. We are. We went to crypto here. We're hodlers. I got the Bitcoin, man. I'm hodling.
And I
2 million.
I forgot to ask him. He has an app that tracks his kids' diapers.
Oh yeah,
and and it's food and it's sleep. So he was at 653 diapers when I left. I wonder if they're going to throw like 1,000 diaper party or something like that. Or
okay, this may be the worst tangent ever.
I like to see. I want to know what
I'm going to take us back from the diaper talk and take us back into something a little bit more exciting. Obviously, lots of news from Friday and over the weekend. The TikTok deal is official here. I guess it's official. You never know with this administration. They say, "Oh yeah, the deal's done," and then we find out it's not done. They kind of jump the gun sometimes on announcing deals, but apparently we got Oracle involved, we got Fox involved, we got Dell involved. It's got some repercussions for Snapchat here as well. Snapchat having a pretty good night, not as good as last night. That was up 15% last night, so it has leaked those gains away. Oracle obviously has leaked away all of its gains. But again, Michael Dell involved, and Rupert Murdoch is apparently involved here too. So we got all kinds of people involved here with the TikTok deal as it's supposedly official. Thoughts, Joel? Any of these stocks?
Well, before any new stocks, do you know who's not involved in TikTok? China. It's banned in China. But it's okay here. Does that make any sense?
I don't know.
I don't think so. I don't think that makes any sense at all. But anyways, Oracle's involved. Dell's involved. Michael Dell's involved. Dell's had a nice run. Flat today. Once again, for Dell, they'll just keep an eye. Tight range on Friday despite the expiration. High on Friday made at 33.97. Backed off the close at 31.94. That's the highest it's been over the last couple of weeks, trying to do a gap fill. I think Brent also mentioned Fox. Well, that's a big move.
That was unexpected. I don't think anybody knew Rupert Murdoch was going to be involved. So you're seeing Fox pick it up here. I don't know. Do we have all details on this, though? I don't know if we have any details here. So
I don't think we have any details.
Tweet that all these people are involved, but I don't think we have any real color here.
As far as I've read, the why certain people or companies are involved is like to quote secure the TikTok algorithm. I think that's like all we've heard about before. I don't know if we've heard about like, is there any like infrastructure that needs to be put in place or anything like that? I think it's just a lot of like, kind of shuffling names around and stuff right now. That's not the worst thing, but I mean,
they're not going to change that algorithm at all. once we think we have it. They're not going to change that at all. It's going to be the exact same algorithm.
We don't know.
Maybe,
I'm not going to
probably.
speculate on what they're going to do with the
Yeah.
algorithm. So,
Okay.
Joel, you're starting bad rumors here this morning. Here, we got to get away from bad rumors starting here. We don't know. We don't even know there's a deal. To be honest with you, like how many times we hear China deal, China deal, China deal. I'm going to say there's a deal when I see details of a deal, because Trump likes to like talk about deals and getting deals. Like, oh yeah, it's done, it's done. Well, let's see the details if it's done, because I don't know if it is done. That's where I'm at on TikTok deal. But again, Rupert Murdoch wasn't expected to be involved here, so that's why Fox is probably the clear winner here this morning, up 3.94%. We had rumors of Michael Dell involved. Oracle, we know it's like supposedly good for Snapchat, but we got devils in the details here, so we don't even know if it's good for Snapchat here. But they couldn't help themselves last night on Robinhood. They got to buy Snapchat up to like $9.25 last night. I don't know if you can see those prints, Joe. Maybe you can, because they have to hit the book at 8 o'clock.
They did.
Yeah.
They did. We kind of ignored this one. This was just kind of like one of the dogs that, when they're buying everything, and it had the long consolidation near the bottom of the move, and then it turned, it's back. I mean, we're at 858. You want to look right instead of left on this one, because you had a pair of highs at 850. This holds an 850 bid. Why the heck not fill the gap here and snap at 922? But important to hold that bid off the open. And it just real quick, Fox up $2 on 10,000 shares, right back or at all-time highs at 57.02. So keep an eye on that level for 21st Century Fox.
Lots of drug news here this morning. You know how I like to do my XBI weekend trade? That works again. Obviously XBI trading up 0.46% here this morning against SPY or Qs, or everything else is down. So the XBI weekend trade once again paying the bills. We have a takeover in the sector. It is in the XBI. It's a smaller portion, but Brenster, if Brenster is there, he can give us the details here. Pfizer looks like they're doing a deal with MTSR.
Yes, they are. It is a $5 billion deal. The deal valued at $47.50 per share. There is contingent value rights of up to $22.50 per share. There is like a schedule in the press release. Kind of interesting to just see how a deal like this is positioned. $5 per share following phase 3 clinical trial for one combo drug, $7 per share following USA approval of that combo drug, $10.50 per share following FDA approval of another combo there. Just kind of interesting to see how these things work. Metsera here this morning trading up over 60% on the deal.
Big move here. And then also we had some other drug news with MBX Biosciences. They had a trial. Stock closed at $10, is now trading and reopened here. It's up 64% here as well. So big move here. They seem to like this drug news on MBX.
They got it to 28.29.
Oh my gosh.
Yes, they did.
Okay. Again, if you've learned anything from this show, I say, I give you like a lesson once a week. Write this down. Don't chase stocks up 100, 200, 300% on news, because in all likelihood, you're probably the last person at the party. But what about the one that goes up 500%, Denny? If more often than not, the one that's up 200% or 300% actually leaks. You got one odd one that might continue to go higher, but chasing, man, chasing. I tell that story all the time. Sitting in the Bray trading office, my second week of professional trading there in 1999. I like this guy sitting beside me. And he was just chasing everything. I was like, he's losing on everything. Just chasing. I was like, you know what? I don't think I can chase like that. I'm going to wait for my setups. That's what I learned. When you're chasing, more often than not, in these crazy bullish markets, sometimes, chasing works. But there is moments in time of it. But most of the time, which is like 90% of the time, you're chasing stocks, you're usually going to lose.
The acquire, I mean, this has changed the pattern over the years. A lot of times acquire used to really get hit. What we've seen in a pattern lately is that the acquirers have been getting pops and then kind of fading. So I don't know, how big of a deal this is for Pfizer. I don't know. Of course, there's some other terms with it, but that was a big pop in Pfizer to 24.70. That's right above the 50-day moving average. Is this a catalyst that kickstart a sustained rally in this? I don't know, but right now You have the acquirer trading up 37 cents. We'll see if it can maintain those gains off the open.
Yeah, and then another merger that just happened. So we got merger Monday here. We're going away from the drugs for a second. Thomas Bravo is coming in and buying Pros Holdings, which is symbol PRO. It is halted right now. They are paying $23.25 in cash here. So that is a significant premium, 41% premium to the closing price. PRO getting taken off the board. I feel like this was rumored a while ago. I remember hearing this rumor. And I don't know when it was, but it comes to fruition here now. So shareholders rewarded here for being patient, I guess, with this one. 23.25 for PRO.
I don't like usually when you say that and you look at the chart, you can say, wow, maybe it was that day. I'm not seeing that day moment in the chart. Maybe if it, at least in the daily going back to March, maybe it was farther back, but you might be right. I tell you, it wasn't back in June when the stock went from 20 to 10 in a heartbeat. But congratulations for PROS Holdings Inc. And also, real quick, Office Depots are going private today too. So a lot of activity here. Yeah. Yep.
What's the Office Depot? Man, there was Merger Monday. Monday back.
ODP.
Yeah, no, I know it's a ticker, but what's the price?
Oh, the price was it was a private deal, so I think we just knew the total share. 28 bucks.
Yeah, so your risk arbs are 27.62 because obviously time value of money in there, and they're saying the deal's probably going to go through. They wouldn't bet it up that much. So, man,
what do you think about this,
Dennis? Merger Monday here. It's been a while since we had Merger Monday. That's kind of fun.
People are looking to lock down just some steady returns here. Potbelly, we can buy it for this. We can close this. We can close that. We can fire this and fire this person. And we're going to get 6.9% on this. Is that what they're looking for? I mean,
it tells me, Joel, it really tells me that we are in the tale of two markets where you have some stocks that are just ridiculously overvalued. And, Gordon Johnson's going to be coming on here in 12 minutes. He can talk to us about some of these stocks. And then you have some stocks that are just ridiculously undervalued. If it doesn't have a sexy story, a lot of these stocks are very much undervalued. And we are going into an interest rate cutting period here. So those stocks that are, basically on valuation, and value stocks do a lot better when interest rates are starting to go down. So I do think maybe it's the time to start digging through and looking, at the stocks that maybe aren't trading at 100 times earnings, maybe coming and digging through and finding these stocks that are trading 7, 8, 9 times earnings, because the corporations are obviously coming in there and doing that. So you're seeing, some mergers coming in here that just like some stocks are obviously just too cheap. So digging in here, again, we'll get Gordon on here in a couple minutes here. We'll dig into some of his picks as well. But I mean, this market, where we could talk, it's bubblicious in a lot of stocks. In a lot of other stocks, it isn't. I mean, IWM just made a new high here. 2,000 stocks just made a new high after 4 years in the gutter. So XBI, biotech still way off 52-week highs. So there are probably some, if you do your homework, there's probably some deals out there.
Okay, yeah, they mentioned the Potbelly going off, and now you have this one, and the deal makers busy over the weekend. Just two things coinciding. We have the EV tax credits ending September 30th. Doesn't seem to be hurting Tesla. I did my Tesla channel check when I was out in New Jersey. And the parking lot that at a mall that I saw that had hundreds, if not 1,000 Teslas in it, is now reduced to one small portion of the parking lot.
Tell me the cars are starting to sell.
Or they're making.
Save the Tesla conversation for Gordon.
He's okay. Of course. What am I doing? What am I doing bringing that?
Joel, get it together here. We're going to save that conversation for Gordon. Okay. A few more stocks here just to go in. Gordon's actually, if he's ready, we can bring him in here early.
Are you ready, Gordon?
Conversation. Gordon, if you're ready, put your thumbs up here. Maybe he's not. Oh, he's ready. Gordon's always ready. Let's go. Let's go early.
Gordon Johnson coming out of the green room here, coming live on Pre-Market Prep, GLJ Research. Gordon, how you doing on this Monday morning?
Uh-oh. Mute.
We got you.
Check your It's not in the room, so check your PC. You might have your PC muted. Okay, that's it's going to be on your own computer because we can see you're not muted on the room. Brentster, can you go work with Gordon in the background for a second? We're just going to put you background. We'll get this figured out. Gordon will be right back with us.
Okay. All right. Just sticking on the theme that's not Tesla. He didn't have a big stake, but Warren's out of BYDDF. He had got that from Charlie, and he's flat now.
It screws everyone up when you say BYD, because even CNBC just had it on CNBC, and they put a chart Boyd Gaming up there.
And I just did that too.
They all do it. Everybody screws it up. So don't be surprised if Boyd Gaming actually shows some weakness here today, because people just can't figure that out. So I actually see Boyd Gaming trading down $1 here, and like on some odd lots, which is crazy to think about. But they do that. They do that because people can't figure out, like, oh, he's out of Boyd Gaming. No, it's Boyd. It's the Build Your Dreams China EV maker, which I have shares of. So Charlie had bought shares of this. I guess Charlie's gone now, and Warren doesn't know that much about it, so he's cleaning it up. It was a small position for Berkshire, so I'm still holding on to it. I think there's a lot of things happening over there. I think China EV is for real, which we can ask Gordon about that here too. He sounds like he's good now.
Okay.
You guys hear me?
We do.
Yes, sir. Yes, sir. Okay. Let's just go to the top here, and we'll just start with Tesla, and then we can go to these other things, and we'll get that out of the way. We know you're bullish some stocks, you're bearish some stocks. I gave you my channel check on Tesla. Why don't we talk about Tesla here at the top of the show?
Yeah. So right now, street estimates for Tesla's Q3 deliveries, as we published last week and we've been talking about for weeks, are ridiculously low. Their numbers, the street number for Tesla at 431,000 cars delivered in Q3 is the same it was to start Q3. Meanwhile, we've gotten good data out of the US, clearly, because the tax credit is ending, so you're getting pull forward demand. GLJ Research is at 467.3 thousand cars delivered in Q3. The street's at 431. So that 467 suggests basically 0.8% year-over-year growth, right? But then, so that's a positive, clearly. Street hasn't adjusted their numbers. And then in Q4, you're looking at a demand cliff. We think the number right now is going to be 422, but it could be significantly lower than that as the US falls off a cliff and you have negative seasonality in markets that Tesla's already struggling in, China and Europe. Also, in rest of the world, Tesla got a one-time benefit in Turkey as there was some change with their incentive structures that caused a huge August, but then that's going to reverse in September. And there were also some incentive changes in South Korea that helped Tesla's rest of the world. So Q3 looking way better than the street. Q4 and thereafter looking like an absolute disaster for Tesla with respect to year-over-year delivery growth. But one other thing I want to highlight. So that's deliveries, right? So you get two numbers. You get the delivery number where we think Tesla's going to beat. We think a lot of that's been priced in. Then you get the earnings number. Street's at 48 cents for Q3. We're at 41. We think Tesla misses. And what's driving that miss? Margins. With Trump's big, beautiful bill, the EV credits that people have to buy from Tesla essentially ended in Q2. So those 100% gross margin EV credit sales are going to drop significantly in Q3. In addition, Tesla told you that the tariffs added 200 million, basically 300 million in costs in Q2, and it's going to get worse in Q3 as you have more impact from tariffs. So we think their margins and their earnings disappoint. We think their orders and their revenues beat in Q3. And then we think when we move to Q4, it could be bad and potentially very bad. We think there's a possibility that Tesla could even lose money in Q4.
At what point, Gordon, do you think the street starts paying attention to this? Because obviously they're valuing this not as a car company anymore. We know if you look at a car company, I've said the same thing. You compare it to GM4, it doesn't make any sense. It's all hope on full self-drive, robo-taxi, Optimus here. I mean, this is obviously, why the stock is valued, well, how it's valued. Do you think there's that possibility that Optimus can pick this up and actually like a product in the world like Elon Musk is touting?
Have you seen Optimus? Are you going to go out and pay $50,000? I mean, we don't even know what the ASP is, but Would you go out and pay $50,000 for a robot that needs to be controlled by a human? Listen, so it's not me saying this, right? Back at their AI day where they did it on the lot of a Hollywood studio, the cars were being teleoperated and the robots were being teleoperated. Robot experts said Tesla's Optimus technology lags Honda's Asimo from 10 years ago, right? It's nowhere near being a mass production product that people are going to buy. It's just hopium. So here's the thing, right? The Mag 6 right now trades at an LTM PE ratio. The Mag 6, all companies that are seeing significant cash generation, significant EPS growth, trade at roughly 38 times LTM EPS. Tesla trades at 200 times, where its growth is now negative. Their sales are going to be down year over year. Its earnings are imploding, and I think they could begin burning cash in Q4 or Q1 of next year. My point is this. When does the street say, okay, enough is enough? I think it's when you start to see this company burning money. Listen, their FSD rollout in Austin has been an utter disaster. The engineer that was sitting in the passenger side front seat with the kill switch has now been moved to the driver's side because Austin's laws changed. And we know now, via the data they reported to NHTSA, that there's been 3 accidents, even with the person, the engineer in the front seat, which, by the way, weren't reported. I think that the rubber meets the road when the people see the devastating impact to earnings that a loss of the $7,500 tax credit. Keep in mind, there's that dynamic, and there's also Trump's big, beautiful bill basically kills the requirement for auto companies to buy EV tax credits from Tesla. These CAFE standards, effectively saying you have to, basically meet these standards, have been eliminated by Trump. That was a huge part of Tesla's profit. In fact, our analysis suggests without that credit, without that requirement by the government, Tesla has burnt money over its life. So I think once you get a company that's trading at, exponential growth assumptions into the future, start to generate negative earnings and negative cash flow, I think the stock comes under tremendous pressure.
I think it would if it started burning cash. I think that is a wild card there. So do you think that's a likelihood, like this starts burning cash, or just a possibility here? I think the street would pay attention if they started burning cash.
We think it's not just a likelihood. We see it as not avoidable, either in the fourth quarter of this year or the first half of next year, due to these credits being pulled. The auto business is an ugly business. You saw that Warren Buffett exited BYD today. EVs are not the panacea that everybody thought. So what's going to happen? You're going to have a price war. You've had a lot of companies that have become, they became public because they just had EV in their name. Think about it, right? Warren Buffett said this, right? In the early 1900s, when the automobile was invented, it was a transformative technology, right? Automobiles versus horses. But he said literally 98% of the companies that were automotive companies went out of business. You would have made more money shorting horses versus being long autos. When you have a price war in the automobile industry, because the margins are so thin and because the capital requirements are so high, it's disastrous. And that's what we're looking at.
Gordon, let's move on to solar here. You've got a lot of interesting notes here with solar because you're bullish some stocks, bearish some other stocks here. I'm just looking. You like First Solar, but you don't like a couple of these other names like SEDG, ENPH. You basically don't like any of the names. JKS, CISQ. Why First Solar? I like that you have First Solar. I'm long First Solar in my long-term account, but why First Solar over these other names?
Because First Solar has the best lobbyists in Washington, D.C. Let me explain. Effectively, right now, via government mandates, if First Solar produces a module in the U.S. that costs about 22 cents to make, the taxpayer is subsidizing roughly 19 cents of that. Does it make sense? No. But do you want to be long that story? Absolutely. In addition, foreign entity of concern rules that take effect at the end of this year, the specifics of which we don't know yet, render it extremely dangerous to rely in the future on Chinese panels with the Trump administration. First Solar is seen as a U.S. panel manufacturer. They have significant capacity in the U.S., and they have lobbyists that have effectively allowed the U.S. government, or basically convinced the U.S. government, to pay for their manufacturing. So it's the best house in a bad neighborhood. We think First Solar significantly outperforms in the solar sector. So if you have solar exposure, you want to be long the guy that has the government's ear. And that, by a long shot is First Solar. There's a way to value the benefits they have from the government. We've put conservative estimates on that, and our most recent price target is in the low 200s. But if we adjust that just to be, moderately more positive, the price target could have significantly more upside. So we still like First Solar. It's been a great stock pick this year for those who have been long, and we continue to think it outperforms, despite our negative kind of bias on the overall solar sector looking into next year, which we can get into.
Yeah, like I'm looking SEDG, ENPH. Like, how are these companies positioned differently? Because you don't like either of these companies.
Right. So SolarEdge and Enphase are what you call module level performance electronics inverter suppliers, MLPE. The way to think about it is simple. Let's say you have 10 solar panels on your roof. You can choose two different type of inverters. One is a string, one is MLPE. That's SolarEdge and Enphase. MLPE essentially has an inverter on each module, right? String connects all the modules via one string and one inverter. You can imagine that string is cheaper than MLPE, right? So MLPE was preferred historically because interest rates were low. Now that interest rates are much higher and the bulk of solar systems are financed with debt, people are looking for cheaper solutions. Studies have been done that suggest there's no real benefit for using MLPE versus string. So what's happening? People are shifting to string, right? That's a structural headwind for these companies. But most importantly, third-party ownership, TPO market. All of our peers on Wall Street think the TPO market is going to expand next year. We do not think that's the case. We think the TPO market is going to fall significantly. And the reason is very simple. If you buy a solar system and put it on your house this year, right, you get a 30% tax credit. Starting January 1st, 2026, if you're a homeowner, that 30% tax credit goes completely away. So what's happening? Companies in the solar industry, more importantly, employees in the solar industry, are leaving the industry because they see the writing on the wall. They don't think they'll have a job in a year, so they're exiting. So my point is, you just won't have the manpower to do the installations next year that you have this year, right? So the problem is, I think the street is grossly off on its assumptions of the TPO market next year. And that is the bulk of SolarEdge's and Enphase's business, as well as Sunrun. So we think when that reality hits, right, and we think it starts as guys start reporting Q3 numbers and have to guide to Q4, and as we move through Q4, people see this cliff of demand next year. I think the solar stocks are going to come under increased pressure. Last year, SolarEdge, probably the worst performing stock in the market. This year, one of the best on all this hopium. But I think the rubber meets the road next year with respect to their earnings. And I think they get hit pretty hard, as well as Enphase.
All right, let's move to something you're bullish on, and that is uranium. It's energy. You need energy, right, to fuel all this AI. Talk to us about the overall uranium sector and some individual picks.
Yeah, so we cover Cameco. We see it as the premier kind of name in the space. Listen, there's been significant delays in uranium output from Cameco, from Kazatomprom in Africa, as well as guys like NXC and the speculative plays. We calculate in total roughly 16% of planned capacity has been delayed. Against that backdrop, right, you have this explosion, maybe that's an aggressive word, but you have a significant increase in energy demand from AI data centers, right? Someone sent me a message today. They're saying their energy costs in Texas have doubled because you have all this increased energy demand, right? The problem is solar and wind are intermittent peak load, which means when the sun goes down, you don't get energy. When the wind stops blowing, they're not real solutions. They're theoretical solutions, but we've seen in places where you install a lot of solar and wind, energy costs explode. And the reason is because, when you get the most power from solar, which is at 12 o'clock, you're getting the least energy demand because everybody's at work. So when everybody comes home and that solar turns off, you switch back to the grid. The cost of switching the limited power output that you have because you've done so much solar and you've decommissioned your natural gas, et cetera, has caused energy costs to explode. So what's the solution? People are seeing that if you want to do truly renewable energy, really the only baseload power solution is nuclear. So what's happening? You have a significant increase in demand for nuclear. Against that backdrop, you have supply that's taking much longer to come online, which anybody who knows nuclear well could have predicted. So we think you're going to have a surge in prices and potentially significant surge. So we think one of the next legs to this AI energy trade is being long the nuclear stocks. Not that they haven't been good. They've been phenomenal. But we think that the AI hype is going to get attached to these nuclear stocks. But even without the AI hype, if you just look at pure supply demand, the demand just isn't keeping up with the supply globally, right? Nuclear is no longer a four-letter word, if you will, right? After Fukushima, it became a four-letter word. Everybody's signing on. And the reason we like Cameco and Kazatomprom is because they're actual producers, the lowest cost producers that have supply, right? Guys like NXE and Oklo, they're not producing anything right now. It's all speculative. So we think you want to be the long the guys who are actually going to benefit near term from this increase in prices. And we think that's Cameco and Kazatomprom.
All right, just wrapping things up here. U.S. liquidity being pulled. Just talk about that. We're at all-time highs in the markets. Expiration. Just give us a little bit of forecast and comments on that U.S. liquidity.
Yeah. So right before we got on this call, I looked at bank reserves. U.S. bank reserves held at the Fed, and we're looking at levels. Let me just take a look, if you guys don't mind here.
Sure.
Central bank reserves are at levels we haven't seen since April of this year. And you guys remember what happened in April. And before that, January of 2025. Both times where markets imploded, right? You saw Bitcoin and some of the cryptos are getting hit hard today. So what's going on? It's very simple. The overnight reverse repo, which basically for decades had a balance of roughly 10 to 20 billion, in 2020 to 2021 shot up to basically 2.8 trillion. What was that? That was excess QE infinity money printed that had nowhere to go. So you had this slush fund of QE money that the Fed effectively created by printing that was worked down from literally 2022 to this year. Basically, we hit 24 billion about 2 months ago, and that's kind of the steady state level. So there's no longer this slush fund, if you will, of QE infinity money. So what's that mean? That means all the debt the Treasury Secretary Scott Bessent is issuing now needs to be funded increasingly out of bank reserves. Why is that important? If you look at margin debt lent out as reported by FINRA and NASDAQ, we hit a record high last month, August, right? But if you correlate bank reserves held at the Fed to margin debt outstanding, the correlation over the past 10 years is literally 93%. There's almost a perfect correlation. My point is this. As bank reserves held at the Fed drop, banks lend out less money, not just to the market and to you and me, but also to people gambling in the stock market. And as margin debt outstanding declines, the correlation of margin debt outstanding to the S&P 500 is even higher. It's like 94.5%. So if margin debt falls as bank reserves fall, in general, that will have a negative effect on the stock market. And I think a lot of people are overlooking that. A lot of people are overlooking, why has the stock market been so strong? By the way, the reason it's been so strong is because they were working down this QE slush fund that's now been fully drained. Since the overnight reverse repo hit 24 billion, Bitcoin is down roughly 7%. Bitcoin is a great proxy on liquidity. So while the stock market continues to surge every day, at some point, who's the incremental buyer, right? That liquidity slush fund is gone for the first time since 2020. So I think there's a problem for stocks out there from a liquidity perspective that a lot of people are overlooking.
Excellent explanation. You guys know him, Gordon Johnson, founder and CEO of GLG Research, joining us on Pre-Market Prep. Gordon, always a pleasure to have you on. Always great opinions, great research. We'll dial you up again real soon.
Thanks, you guys. Good to see you.
Thanks, Gordon.
Okay.
He's got information, though. You got to give that to Gordon. There's a lot of information to take in there. You know, whether he's been right or whether he's been wrong, he is full of information. Always fun to have on. We've had Gordon coming on the show for a lot of years here. I mean, the counterpoint. This has been the counterpoint for Tesla for a very long time. So, the Breadster, we got a little business to do here.
Yeah, I want to say thanks to our Hive sponsorship show. This show is brought to you by Hive Digital Technologies, a global leader in green power data centers for Bitcoin mining, high performance computing, and AI operating. Let me put the chart up here.
Yeah.
You can take a nice little look at the chart. Operating with I lost my spot. Operating with nearly 0.5 gigawatt of renewable energy, Hive is on track to capture 3% of the world's Bitcoin production by the end of this year. In the bottom right corner, there's a little QR code. You can scan that QR code to learn more about Hive, or you can also click in the link in the description of this YouTube video. Thanks again to our wonderful sponsor, Hive Digital Technologies.
Great stuff. Let's do a couple ratings here. There was some interesting ones, and then we're gonna do some ticker time. So get your tickers ready. You can start spitting them out to us right here now. Oh, and then you want to do you had a couple other housekeeping things. I see IREN, Brentster. Before we let you go, I do see IREN had some news. This is a retail darling.
This has been a retail darling. This name popped up about a month ago or so. I mean, it's been around before, but it really started getting on people's radar when we had the data center infrastructure plays being mentioned by Oracle, being mentioned by Nebius. Shares are up about 8 or 9% here this morning. The company issued a press release this morning at 7 a.m. Says the company doubled their AI cloud to 23,000 GPUs, raising their AI cloud average return target to over $500 million. They also did mention the NVIDIA Blackwell here in this press release. Again, shares trading up about 8 or 9% on this.
Big move here. I mean, the stocks run long too. I think we at this point in time, some of these trades we've just missed, like I think chasing at this point in time, I think you need a healthy pullback on some of these names because it just went so far. But chasing's been working for the last couple of weeks. So we can see. Joel, you got any technical thoughts on IREN?
50. I mean, that's all I could give you. That just popped to 43.50 on the initial news, new all-time highs. So keep an eye on your pre-market high.
Then also we had an offering, QUBT comes out with an offering. This is the problem. When you have these companies that are in full cash burn situations and don't have any revenue, pre-revenue, every time their stocks pop up, they're like, oh, this is an opportunity to raise more money. Cool story. I think the quantum story is going to be for real. I just don't know the timing of it. But here is the issue. You chase these things and you're like, oh yeah, this is going to 30, 40. Well, what happens is it's a good opportunity for the company to raise some cash. So QUBT comes out and does a $500 million private offering. And if you look at this, stock is trading down here this morning, 13%.
Boom. 13. You mentioned QUBT with the offering?
Yeah, QUBT.
13%. 13%. I thought you said 13 cents. Let's just go back to the pattern. I mean, that the offering in NBIS, it shaked and baked for a little while at 92. Once it figured out 92, that was a level. It took off back above it. So when I'm looking at this one, can they get it done at $20? I mean, the market's pretty good at figuring out. It's not QBTS. What's the one that is doing the offering?
QUBT.
Cute, man. They're all so similar.
I know. I do get them all confused there too.
QNTM, QNBS. Do they want to get it done at 20? I mean, I'm just looking at this. They hit it down. They hit it to 20. It's holding 20. I think that's where they're gonna shop the offering around. So we'll see how that level. First of all, where the level is, how it reacts to that level, and right now in the market environment that we're in, these offerings, they might, dip and dive above it for a little bit, but they turned out to be pretty good. I mean, and I'll go back to the SoFi at 2072. I mean, there's been some good deals. SoFi pressing $30 here. So that's my look on offerings.
They wanted a technical on Hive. We could do a technical on our sponsor. Give us a technical analysis on Hive here, because we obviously ran.
Move.
Stock has been running.
Big
and,
move.
We're peeling back here a little bit here, but, I'll let you do it.
I mean, I'll just look at it the way I look at any other stock here.
For sure.
Had it moved 260. Where did you get to? 260. Yeah, it was 433, right? So that's $1.70. Half of that is 85. So you could get a 50% retracement here. That's what if you're waiting to buy this on a pullback, 85 takes you to the 330, 340 area. Daily low at 350. So a little bit of a pullback into that area. See if the bulls reload. A lot of times a pullback consolidation, but definitely a strong move. A little bit of a retracement in Hive, HIVE.
And then you got RCAT, RCAT, which has been another one that looks like it's starting to perk up to me here. I know Carmen in the STN room has been, I believe it's Carmen. Is it Carmen that's been on this one? RCAT? I think it is. But it looks just interesting. Like, I don't mind the setup here at RCAT. Kind of looks like it's just like putting in some work, going sideways a little bit. And it looks like it wants to go higher to me.
Big move up, pullback, consolidation around the 10. Looks like buyers are stepping up over 10 over the last few days. So just look at it.
I think they did have an offering too.
Yeah. Yep.
So see where that offering price is. Sometimes those offering prices can act like floors.
The only concerning thing on the chart to me is it had the big bump in July, and this recent bump came up shy. So big move, retracement, but a lower high. That doesn't mean you're not building a good base here at 980, $10 to catapult to take that out. So that's what you're looking at. In RCAT, 960 says Yosef. So boom, they bought it up there. Eventually ended up being a good price and back higher. RCAT trading up 28 cents at 1032.
We have a very light earnings week here, but there are some interesting companies here. The highlight of the week will be Micron tomorrow night, which is MU. I buy these stocks ahead of the reports. It actually was trading up over $2 last night, which is a crazy move. I mean, they get so excited. You can look at the chart. You can probably see some of those prints there. It was trading up in the 164s last night, and even into early trade. I mean, chasing these things at 4 o'clock in the morning or overnight is never a great idea here. Selling into that strength is a better idea, which I exactly did. But I mean, Micron is a storied stock. It has been running. I'm kind of scared the bar might be a little bit too high here for Micron. If we're looking at the expected move here, I'll just quickly calculate that for you, unless you have it in front of you, Joel. Just looking at the 162s, I can go to 162.5. Looks like 825 and 855. What's that math? 16, almost $17. So it's a big expected move, over 10% here. Thoughts on Micron? The bar is high.
Super high. And they came out with a good report, and this was back here. Back in June, and it traded high in the pre-market, and they didn't reward it. I mean, it had good earnings and good guidance, but didn't have good price action. Gave you a great opportunity when it pulled back under 110. I mean, I'll go with the high bar here. All-time high 170.45 that was made last week. Didn't make that on Friday, so that's a little interesting. Let's just keep Friday's range in check here. Friday's high 163.70, and then for later on today, if you're looking, the all-time closing high price was 168.89. I did, based on the straddle, based on the price action, I think I'd be more of a seller at the expected move. That would be what? Over 180, 180. Well, it depends where we close today.
What a move, though.
Yeah. Whew. Micron, man. I remember that thing was pulling back. It was like, well, they had good earnings. What's wrong? They had good earnings, but being rewarded.
Dips to be bought on storied names. That's worked all year. The storied stocks, they get the dip, on earnings, or they get the dip on, for whatever reason, macro effects. And those dips eventually get bought. And there you look at Micron at the highs. Other stocks reporting AutoZone tomorrow night. Wednesday, we're going to get KB Homes. We're going to get UEC, which is a smaller uranium name there. And then Thursday, we get Costco, Accenture, Jabil Circuit, PCE also, and GDP on Thursday as well. So we get a little bit of economic data here. But overall, very, very light news week.
We do. So with some other...
We didn't cover KVUE. It was a big story that we missed here today. And obviously, it is fully expected here that the Trump administration is going to come out and say that Tylenol can be a contributing factor to autism. And KVUE, obviously maker of Tylenol here, is, well, acetaminophen, which is obviously the main ingredient in Tylenol, is down 4.25% ahead of this. Now, there's rumors of this a couple weeks ago. You can see Wall Street Journal, I believe, broke
yeah.
those rumors a couple weeks ago. That's when the stock really got hit. So not completely unexpected here. I believe the details are going to be that pregnant women shouldn't take acetaminophen, which doesn't sound maybe as bad as we originally feared, but still not good. I mean, if you're making Tylenol and there's so many other, alternatives to pain medication, it's an easy switch. So I don't know the truth to this, not truth to this. I don't know any of that. I don't know how the study's going to be done. We're just giving you the rumors. The rumor is that they are going to link Tylenol and acetaminophen with autism.
If I don't know what to study. I'm not a chemist, so I can't tell you that. The believers in this stock, besides the spike low at 17.15, you had a lot of believers at the $18 area. It is now back below 18, so that old support is now going to be new resistance. And even higher, you had some bears here you got a quad top at the 1860 area. So even if you clear 18 today, if you get anywhere near 1860 or the mark, I think you're going to find problems. I mean, when this news comes out, I think if one thing we've noticed this year, fighting the news, pro or con, out of the administration has not been a way to make money. So that's my no comment on what it does that.
It's been very tough fighting. If you've been fighting Trump the whole way here, it's been tough. Lots of upgrades here.
Let's go.
Yeah, I'm just going to do the highlights here because there's about 20 of them. So I'm going to jump to a note from Morgan Stanley, actually, because they're upgrading multiple semiconductors here this morning. They're upgrading ASML to overweight. They're upgrading a few stocks overseas here, too. They're also upgrading Applied Materials to overweight. They're upgrading LRCX to equal weight. So Morgan Stanley coming out, bullish some of these semiconductors here. Applied Materials stock we haven't talked about for a while. It has really run here back. Also, ASML has really been on a flying run here the last 3-4 days. Like, it went from $800 to $965. These are incredible moves here. I think, again, I'm at the point where I don't want to chase stuff here now. I feel like the money being made chasing is going to slow down tremendously here coming in. I think chasing stocks works sometimes. It's worked for the last couple of weeks. I think that trade is getting long in the tooth.
Well, they got it up, and they got it up on 67,000 shares, which is pretty big for this stock in the pre-market. Trading right here, you want to see follow through. You want to see it.
Well, it's an ADR, so it's already priced into ASML, so it's kind of priced where it wants to be. Applied Materials is not an ADR, though, and it's trading up, so maybe better to do a technical on this one.
This one has not had the kind of move that the other ones have. Breaking out of a double monthly top here, might still be right there. Yeah, no. To me, a breakout here over 192. So I'd be more inclined to pull back buy a pullback to the 192 area, then chase it up here at 193.30. Recent high of the move is closer to 200 here. Once again, you get these analyst moves, you get big, you'll find out off the open. If I can't think of what the stock was on Wednesday or Thursday. I was a little bit skeptical about the upgrade, but it opened, it was bid, it never deviated, it had a good day. So try and catch the opening turn on AMAT and also ASML.
Other ratings here, Sarepta upgraded to buy or outperform, I think they called it, at BMO. Stock's just been sitting here doing nothing.
Nothing. Whoa.
Going sideways. People don't know what to think about it. Well, BMO's coming and saying buy the thing. I'm going to go see if I can dig up this note because adding some color here is sometimes fun. So, I don't know why.
I saw a $50 price target on this.
Yeah. So, Analyst, here's some color before you give your technicals here.
Sure.
Well. They're upgrading from market perform to outperform, putting a $50 price target on it. So it's a big price target. Analyst comments, although we appreciate investors' credible concerns around a potential ambulatory patient death that could compromise Elevidys' viability, Sarepta's current valuation renders its risk-reward skewed to the upside, given our physician survey and analysis of FAIR's data below suggests that Elevidys uptake is ramping up and could beat expectations. They're talking about readouts. They're upgrading to outperform with the biggest risk of our thesis being the death of another ambulatory patient. 100%. I mean, if you're in there and you get another patient dies, it's big time game over. And stock will fall 40% in a day. So you can't have any more deaths. No more deaths. Maybe, just maybe, because the last time the death they all thought, and then they didn't attribute it to, like there was other circumstances there. So I mean, we get another one. There's going to be no forgiveness on this whatsoever. So I agree with the BMO analyst. You cannot have another death. That's the risk to the thesis. That's a real risk.
Popped up to $19 twice in the pre-market trading. I mean, I cannot get anything from the dailies here. I got to find a pulse in this one. Just flatlining, bulls and bears, battling it out at the 50-day. So let's look a little bit more forward. Can you establish a bid right there? 1766 comes in as a 50-day. We're a buck above it. So if you're looking the real deal here, this is a story. Look for a pullback maybe here on the upside. Got a lot once. I just want to get your post craziness low, and that has been 22. Looks like 22.5. So that's before you start getting into any of the gap for this stock. Okay.
Well, we're going to continue ticker time over on Stock Trader Network. There's multiple traders asking, where is this STN room? So we call it STN short for Stock Trader Network. You go to stocktradernetwork.com. It's right there. You can sign up quickly. There's a 7-day free trial. Try the room out there. We are basically, I'm giving my playbook all the time in there. So that's why, people say all the time, oh, I can't pay $199. I can't pay. If I was new to trading, I'm going to just do a rant here right now. If I was new to trading, I would pay $200 all day long a month for a professional trader to sit here and talk their playbook. I mean, I don't get it at all, but I guess everybody says, oh, they could find information for free on the internet, and everything is free, we don't pay. So I don't know. I'm giving away my playbook in there. I feel like it's too little. I honestly have had a conversation about jacking this price up. So obviously the people who are in there, we're not going to jack you guys up, but I think we're at a certain point. I feel like we're going to raise prices in this room because I'm giving away trades all the time. We do all the closing trades. I feel like we're giving away too much, to be honest with you. So if you're not trying us out, try us out. 7-day free trial. Nothing to lose.
And we're working on some swag there. So if for current members, Brent's been working hard on that. We got some swag coming for your way. And even if you do a free trial, we might throw you some swag too here. Ryan Craver coming on tomorrow to talk retail. I will be out for the Jewish holiday, but Brent and Dennis will for sure take the reins and do another excellent show. So that's it today on Pre-Market Prep. Thanks for joining us.